Hello everyone, the NASDAQ is closing below its very important major trend line from December of 2022. It looks like we're about to get one solid close below it. What does this mean for the market? Is this the beginning of a bear market? What's happening? Who knows? In today's video, we're going to take a look at exactly what the next steps are for the market. In today's video, we're going to look at the large tech stocks as a main precursor of what is yet to come. We're going to take a look at the VIX. We're also going to take a look at the crypto market because all of these things in conjunction give us a much broader and better understanding of which direction the market wants to go. All right, so without further ado, let's get started with the video. First and foremost, during this bloodbath, Apple is green for the day. Apple is posting a bit of a bullish sort of structure above 268. This is generally not that bearish for the overall market. If Apple also began to be extremely bearish, this would be worrisome. But the fact that Apple is doing this is a good sign. I'm not saying this is an automatic, oh, let's just go long here. It's not going to drop below. I'm not saying that it won't drop below 268. What I am saying is, what are the optics showing us? What are the optics of the market showing us? It's showing us right now, Apple, second largest company in the entire world, is green, up 0.4% so far for the day, while the overall market is red. So that's just something to take into consideration. We have major support on Apple down here at 264. By all means, we can easily come back down there during this week, but it's important to realize that it held and it's green today. All right. Microsoft is actually bouncing off of its lows. It's not currently, at the time of my recording this, it's 3:04 p.m. Eastern time. The overall market is extremely red, but Microsoft is bouncing off of the lows. The lows today were about 507.50. We're at 513 now. So Microsoft, we've been monitoring how it is in a very tight range. All right. Very simply, we just returned back into the range post earnings. So as long as we remain really above 490 to 500, all of this is still a bullish structure for Microsoft. What is Microsoft doing in the grand scheme of things? What is this pattern on Microsoft? This is a bull flag. Bull flags are extremely bullish patterns. So by all means, obviously, it's a bit worrisome that the overall market is red, but Microsoft is coming back down to its comfort zone. The comfort zone, the area where it initially bounced. So that's what's going on with Microsoft, and it's high off the lows. Amazon. This is Amazon. We've had multiple opens and closes outside of the upper level of the Bollinger Band. We were bullish on Amazon heading into earnings, and we ended up gapping up twice. We gapped down lower today, but Amazon is still holding comfortably above 245. This is still genuinely not a completely bearish moment for the stock. In general, long term, this is a pretty bullish situation in my opinion. If we end up pulling back to around 240 to 245, this would be a good spot to re-enter and add to longs. Obviously, we don't want to add to longs after an extreme bounce rip to the upside. Healthy pullbacks are necessary. So it's important. Hopefully we do get a bit of a pullback in Amazon. That's what I'm genuinely hoping for. Hopefully we do bounce to 240, get like a nice snug 6-month out call position. That'd be perfect, in my opinion, for Amazon. And then, below 240 and 238, that whole little area right there is very, very important level of support for Amazon. Immediately, obviously, it's not looking as strong as Apple, but the upper level of the Bollinger Band is starting to cool off. So what's happening right now? The upper level of the Bollinger Band is skyrocketing upwards, and it's about to finally touch price after multiple trading days. Now, tomorrow Amazon is going to be trading within the upper level of the Bollinger Bands, which shows that the price is not algorithmically overextended to the upside. So as long as Amazon's Bollinger Band continues to skyrocket like this, Amazon can continue to rise regardless of how sharp the moves to the upside are. Because down here, the Bollinger Bands were tightening up. Okay, let's just simplify this. Down here, prior to the earnings move, the Bollinger Bands were tightening up. Okay, when the Bollinger Bands tighten up like this, it shows that there is a large potential where if a move to the upside or the downside occurs, that there might be an explosive move, number one. Number two, it's going to end up rebounding. So right now, if the Bollinger Bands are very far overextended, there's not going to be a huge rebound if the price moves higher. Okay, so this is bullish on Amazon. The fact that the upper level of the Bollinger Bands are rising in conjunction to the price not falling sharply. This is not a sharp fall. We fell lower after earnings. This was the earnings price. We're literally right at the same price. Not bearish at all for Amazon. One of my favorite stocks moving forward long term. I've been very, very adamantly bullish on Amazon. Tesla, another one of my favorites. This is still holding above 440. In general, Tesla and Apple tend to move the same. They move similar, right? But currently right now, Tesla is down 4%. It's holding above 440, which is a very major level of support. But in general, what is Tesla showing us? Regardless of what's going on right now, what is Tesla showing us? This is a bull flag, while creating basically another bull flag. Okay, so I'm an artist, as you could see. But regardless, this is still bullish, right? We haven't dropped any major lows. Just the overall structure of Tesla, the overall structure of Amazon so far, the overall structure of Apple are all bullish. These are not complete warning signals for the market. It just goes to show that there needed to be a bit of a pullback into levels of support, for a continued move to the upside to continue. There's no way that the move would just continue to rally. There needs to be some sort of fear and anxiety-inducing moves to the downside for people to not capture the move to the upside. Very simple. So the main level that really needs to hold for the upside move in the short term is 438 on Tesla. If 438 can continue to hold, then we're clear. We're clear. And it should continue. But regardless, I'm going to be looking to re-enter into Tesla calls soon. We played the 500 calls expiring December, skyrocketed up 40% within a day, and now, we're just going to wait for a good opportunity to go long again on Tesla. This is Google. Does Google look bearish? Does Google look like it's overextended to the upside? Absolutely. Does it look like a time to aggressively go short? Maybe. It is kind of bearish, right? But is this what I'm trying to really drive home is this just had a monster rally into earnings. We are still trading above the earnings price after gapping up again afterward. So this is still showing that there are a lot of bulls, a lot of people still willing to be bullish on the stock. People have not completely unloaded and began to be bearish. So just keep that in mind, all right? Obviously, this is clearly overextended to the upside, similar to what we saw on Amazon and all of these other stocks, right? Clear cut. My point is that into this strength, I would much rather be bullish on dips than to be bearish into strength. I would much rather look to buy dips at around 270. If we drop down to 265, that's great. I would rather be bullish on dips than try to short strength. Because look at what ended up happening here. Oh my God, wow. October 24th, we're gapping up. All right, time to go short. Oh my God, October 29th. Oh, we gapped up again. All right, this has to drop now. We just averaged in. Oh, wow, great. Okay. What happened October 30th? A huge rip to the upside. By that point, you would have, shorts would have been completely decimated. So, I would rather not try to catch tops in, sorry, I would much rather not try to catch tops in strong movers. It's much easier to catch dips. So that's what I'm currently looking at on Google. So far, all of these stocks have either held support or they're, still showing some strength and bouncing, right? So that's what we're currently looking at. Google currently down 2%. So Netflix, I was bearish on yesterday. I was saying that there's clear-cut bearish momentum still in Netflix. And one of the easiest things to look at is that this lower level of the Bollinger Band, as we were just mentioning earlier, right? We were just looking at it. When the Bollinger Band is pointed vertical in up or down, right? It shows that there's a lot more room to that direction. So the Bollinger Band is currently pointed completely lower, which means that Netflix can continue to hug along this trend line, along this Bollinger Band without being overextended to the downside. This is not extremely bullish for Netflix. So just keep that in mind. We have major support on Netflix at around 1,050. Until then, we can continue to drift a bit lower on Netflix, in my opinion. And of course, we have to take a look at Meta. So Meta is really getting overextended to the downside, which shows that there is a potential for a bounce. So Meta is clear-cut trading outside of the lower level of the Bollinger Band multiple times. So this is getting really close to a solid buying opportunity, in my opinion. I really want Meta to drop a bit further, closer, maybe hopefully below 620, and then we can end up going long on Meta, in my opinion. Because when something is trading so far out of the lower level of the Bollinger Band, it wants to revert back into the mean. It wants to return back into the Bollinger Band. So if it's so far overextended to the downside like this, it wants to reverse. So that's why going long in this moment is generally a really, really good opportunity, in my opinion. So that's what I am looking at on Meta as well. But to really wrap things up, to put these things together, we need to look at the chip stocks. The chip stocks are going to give a better view of what's happening in the market under the hood. So Nvidia recently just had news that Michael Burry, the person that was famous for The Big Short in 2008, the housing crisis, he released that he was actually short Nvidia in his recent 13F filings. He's short Nvidia. Now, people are speculating that this caused a bit of a sell-off in Nvidia. But regardless, if we're looking at it, right, of course, we were also very overextended to the upside in Nvidia in terms of the Bollinger Bands. But this is hovering still around $200. What has recently happened in Nvidia? If we zoom out, okay? Nice and simple. If we zoom out here, what has been happening with Nvidia this entire time? Is this going to be a huge drop to the downside where we see back to, 160s, 170s? I doubt it. Or are you way more likely to just be able to look for good dip buying opportunities, maybe at 190, 195? Yes. In my opinion, yes. So that's currently what we're looking at on Nvidia. There is clear-cut bearish momentum, right? There should be a bit more room to the downside, a couple dollars, $5 to $10 more to the downside, in my opinion, on Nvidia. But overall, it's maybe a couple of days away from support. And then we're going to have to see how the market responds at that level of support, okay? When we're looking at AMD, AMD is not as bearish. AMD does have earnings after hours. We're going to see how AMD's earnings report goes. That's going to be interesting, but just in general, AMD is probably also doing well due to its earnings after hours. So it's not a completely bearish just drawdown, right? But AMD does have a lot of institutional backers, lots of partnerships with OpenAI. Great AI company. So we're going to see what happens after hours for AMD. When we're looking at ARM, ARM gap down. It's currently trading right above 160, which is a very major level of support. And it's getting very, very close to a rebuy. Another thing that's going on is we are very close to trading outside of the lower level of the Bollinger Band. We're about to touch it. The lower band is at 159. ARM is at 161.50. So this is getting pretty close to a major support level. And I'm also interested to see how ARM does with earnings tomorrow as well. So ARM and AMD are about to report earnings. We're going to see how that goes. Qualcomm, another big name. I was expecting a bit of a move to the downside in Qualcomm. Hopefully back down to around 170, where this drawing basically is, like 170, 172. That would be a much better opportunity to go long, in my opinion. So this sort of bounce already happened, and then we're getting a bit of a pullback. So I would like a good dip buying opportunity on Qualcomm around 170 to 172. Once again, another couple of days to the downside. That, in my opinion, is going to end up, not terrible. Not a terrible situation. But what I'm purposely looking for are good long opportunities for long-term holds. I am not increasingly bearish in the short term. Yeah, it could end up dropping, but I'm not increasingly bearish for months down the line. For if your horizon, when you're looking at the market, when you're analyzing the market, is 1 to 3 months out, it's much easier and much more comfortable to take the market as it is. These pullbacks are going to happen. We've seen these pullbacks occur time and time again. We've seen what happened last month with the Trump news. But by no means is that an automatic sign that the market is going to be extremely bearish. Absolutely not. You have to look at the market in a broader sense, zoomed out. Qualcomm is pulling back to a level of support. All of these large AI companies were overextended into the stratosphere. Amazon, Google, they're all showing a lot of strength. But a bit of a pullback is completely necessary and normal for the function of trading to continue. Profits need to be taken into highs. It's normal. So just keep that in mind. I am looking for dips to buy in Qualcomm as well. With that said, what we've seen so far with all of these large tech stocks is, there could be a bit of a move lower for the next few days. But by no means is this really, a completely bearish setup. It's not like a completely terrible outlook for months to come. This, in general, I want these dips to occur so that we can buy the dips. Okay. So now this is a time frame, the daily time frame of the NASDAQ. We are now trading below the uptrend level from 2022. We got one solid close below this level. And if we get another close, then that should signal a bit more room to the downside. So this 623 to 624 level for tomorrow is going to be a major level of resistance. If we do end up getting a bounce, a lot of people are going to try to short that trend line. People are going to try to short this trend line here. So just keep your eye on a bounce to around 624 tomorrow. And also, like, a lot of the NASDAQ's move is going to be dependent on how well AMD does for its earnings. So keep that in mind as well. We have major support on the NASDAQ at around 615 to 617. And that's right around the corner. So just keep that in mind. And then the 20 exponential moving average is right at 614 as well. So things are a couple of days away from major support on the NASDAQ as well. Now, when we're looking at the SPY, we are also a couple of days, maybe 1 to 2 days away from major support on the SPY. 668 to 672 is a very important major zone on the SPY. It coincides with the 20 exponential moving average. It coincides with prior highs and resistance levels from before the Trump news occurred. And this is just a normal pullback. A normal pullback, even if we come within this range here. This is normal. How much did the market drop? The SPY is down 1%. SPY is down 1%, and people are really, really like completely terrified of the downward move potentially. Remember, guys, when we had this huge move to the downside, when Trump reported the tariff news with China, we ended up buying the dip. We bought the dip, and we are comfortably up. We were bullish this entire time. So by no means am I a completely bullish person or a bearish person. I trade what the market shows us. What the market is currently showing me right now is that there's a bit more room to go to the downside. But in general, I'm going to be looking to buy dips. That's what I am looking for on the SPY. Let's go ahead and take a look at the VIX, because it's going to give us a much better understanding of which direction the market wants to go. The VIX $17 level has been a very, very major, important level of support. All right. The VIX is so important to monitor because it has an inverse relationship to the market. If the VIX is jumping like this, the market is falling like we are seeing right now, right? The $17 level on the VIX, if we are trading above 17, the market is in a bearish setup. If we're trading below 17, the market is bullish. Okay, so what are we looking at right now on the VIX? Okay, we see a huge gap upwards. Obviously, the VIX is up 9%, 10% today. Huge gap upwards, and it's holding above 1850. That is not bullish for the market. Yes, this was a huge red candle, right? But if it holds 1850 and it holds this 20 exponential moving average, which is this orange line, that means that the VIX can continue to rise. And if the VIX can continue to rise, that means that the market can continue to fall. Okay? Very, very simple. That's currently what we're looking at on the VIX. Let's have some fun and let's take a look at crypto. All right, this is a daily time frame of Bitcoin. All right, Bitcoin is, I love crypto. All right, I love crypto. We are having a huge move to the downside. We dropped 6% today so far. From the most recent highs in October, Bitcoin is down about 20%. Bitcoin still has room to drop to around 96 to 98,000 right here. We are getting very close to a very beautiful, amazing opportunity to go long on Bitcoin. There is a bit more room to drop, but what is most interesting is that Bitcoin is trading outside, very, very aggressively outside of the lower level of the Bollinger Band here. When it is trading like this, the Bollinger Bands show the price wants to return back into the Bollinger Bands, okay? So when you're trading this far outside of the Bollinger Bands, there tends to be a reversal back into the mean. It wants to revert back into the Bollinger Bands. So the weaker this move is on Bitcoin, the faster we get, in my opinion, to 94 to 97, the better the opportunity to go long. So we have to look at all of the cryptos as a whole in conjunction, because what we're seeing right now on Bitcoin is overextension. But then when you look at Ethereum, when you look at Solana, these are showing way more overextension. And Ethereum is getting very close to a very, very major level of support. It's almost at 3,000 already. Ethereum is almost at $3,000 already. So is this the time where you really want to go short on Ethereum after a huge move lower? Just think about it. How many times during trading have you chased a short into weakness? Probably tons of times. But how many times has that worked for you? Probably none, right? So this is one of those instances. Ethereum is dropping very, very aggressively. We do have room. What do we have? We have another 10% drop. By all means, the market can drop another 10%. Ethereum can drop another 10%. That's terrible, right? But what is the upside potential on Ethereum? If we do drop to 28 to 3,000, the upside potential is massive. There is a huge potential move to the upside on Ethereum. When you look at it on Solana, it's even more prevalent. Solana is coming down to 145. It's holding above 140. How much is Solana down since October? Since the beginning of October, this move? Solana is down over 37%. If it's down over 37%, is this now the time to go short? No. Do you think Solana and crypto is going to go to zero? No. Because why? Large hedge funds, banks, institutions are in crypto. Now is not the time to become extremely bearish. Okay? So with that being said, these altcoins, Solana and Ethereum, are really very, very close to major levels of support. Bitcoin is also very close to major levels of support. Everything is dropping aggressively to levels of support. MSTR, I don't know how this guy hasn't been liquidated, but MSTR is actually also getting very close to levels of support as well, into the 240s. 230, 235 level is massive level of support. So we might actually even go long MSTR soon. Everything is getting close to support. All right, we could even take a look at Riot, Mara. Riot not doing that bad. Mara, just in general, where is Mara right now? We're getting close to $16 support. So in general, all the crypto related names, coins, everything, they are getting close to levels of support. So keep that in mind. I hope you guys enjoyed the video. All eyes on AMD's earnings after hours. This video is probably going to come out before the market closes. I hope you guys enjoyed. We posted some more swing trades. Today, we went undefeated again in the trading, in our day trades. So we're on a fabulous, amazing run. Things are going really, really well in the Discord. If you guys want access, click the link in my bio. You guys gain access to all of my day trades, my swing trades, everything in real time. You guys getting access to my voice chat as well. Everything, all in one. So if you guys want access, click the link down below. I hope you guys enjoyed the video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Have an amazing day. Thank you. And be safe. Be very, very safe. Do not try to overly aggressively buy dips because there is more downside room, okay? Give yourself time. Give yourself enough ammo to buy in cheaper. Do not throw your entire portfolio into these lows because there is more room to drop, okay? Keep that in mind. All right? Just be safe.